All right, so crude oil, beginning of 2016. Could you have taken that shot? That's the that's the question we're asking today. We're not focused on the drop, although that's a beautiful drop, obviously, and we'll talk about that in another video. But this rally off of 30, could you have predicted it? Well, let's look at the monthly chart. We've got the bottoms getting lower, right? Lower lows, and the volume. You're seeing these green bars. Look at how low the volume is throughout that whole drop, right? It's pretty even. And then we're starting to see the green pop up, right? The green bar. So a green up bar is on higher volume, above a million, right? That this is above 1.5. This is above 1.25 million, right? This is above a million as well. So you're starting to get some more. The bulls are starting to pop on the up months on higher volume generally. Bullish divergence on the monthly, bullish divergence again. I really like the MACD. We had 1, 2, 3, if you count this as one, and then boom, the MACD just dropped and the price dropped. This can also be seen as 3, right? So 1, 2, 3. So I love threes, and I love threes that look like this. You got 1, 2, 3, and then 1, 2, 3 here, and then boom, it drops. But also the MACD is just really, really low. So I like that as well, especially if it's on divergence. It means that it's possible that, and there's another 2 here. I love 3s and 2s. I love 3s primarily, and then I love 2s right afterwards. So this is there's 2 rounded points here, and on bullish divergence. I love the Arun upline if it's staying down, hitting the 0 line a lot. I like that. Generally, this is secondary or tertiary, but the Arun up down I generally use for exits. So if I was long, you want to get out either when it hits the 100 line, or maybe it might keep going higher. But as you don't want to get out before that, right? So if you're getting long, I can almost promise you, well, we can see already, right? But you wouldn't even want to think about like getting out until it hit that. So if the and I already started coming up like that, but yeah, I just and then here it happened 3. I mean, threes aren't always. It's not always important to look at 3s and 2s, but I just think that they come up a lot, and but I like the Arun up line generally. I like the blue line to be at or near the 0 line, and having spent a lot of time at the 0 line and then get long, as opposed to spending a lot of time at the 100 line and then get long. It happens, but I just think the setup is a little bit less fantastic when the Arun up down line is a little bit or indicator just looks a little wonky. CCI bullish divergence. Some of this stuff is somewhat redundant, obviously. However, because everything's keyed off of price, right? However, it's very telling, right? That these indicators are showing divergence, and I've seen lots of indicators. I've been futures professional for many years, and having done that, having been in that world as a professional, I learned a lot about indicators. I'm sure you can imagine guys that are in the markets, they generally are going to look at least 100 indicators just to poke around, and these are the ones that I like the most as far as my general overnight stuff. And then the tricks came down here. I mean, the fact that the tricks is way down here at the -2 line lets you know that it's possible that we could see a monster up move, and that's kind of what happened, obviously, to say the least. Let's look at the weekly chart. Increasing volume here, big blast up as the price is rallying. You're seeing a lot of green overwhelm that red. And then here also, big green, so as the price is heading lower, look at the low volume here all the way through that drop. And then boom, this explosion. And there's a lot of green. There's a lot of red here too. But just the fact that generally it's contrarian. Also, you're seeing other evidence, right? Other evidence that maybe a direction change might happen. and with these big explosions in volume, and you want to look at the other indicators and the other time frames to make sure that they all add up to the same sort of story that these tea leaves that you're trying to predict here, trying to use to predict price movements. So bullish divergence on the RSI, bullish divergence on the MACD. Again, the Irun upline, spending a lot of time down in the oversold arena. And then also the tricks here is showing some divergence as well. And this was early 16, man, like January, February, and then just boom, from 30 bucks up to 75 bucks. It was a spectacular rally. $45 move, and it happened. It took a couple of years though. You're talking, took a little while. But that's still an unbelievable move, unbelievable rally. And yeah, so here as well, you can see this explosion upwards in volume as the price is heading lower, which could suggest a contrarian, could suggest a bottom. You want to think about the story, right? Like think about what story might be happening here with this explosion upwards in volume. Well, we've already dropped 60, 70 bucks, so it's, could this be the bottom? Well, yeah, there's some evidence here, and again, divergence on the monthly, the weekly, and now the daily here. Divergence. Irun up is down near the zero line a lot. Divergence and the tricks divergence. So beautiful rally, 45 to 75. It is just an unbelievable rally. But it would have been tough because the drop, we didn't close above the EMA once until like March of 16. And that was after, just this huge drop, right? From 100 down to like 30. But here we kept crossing it. We crossed it here and here, and then crossed it here, here, and here. So it's not a layup, even on the monthly chart. I don't think this would have been an easy trade to play up to 70, 75. But if you were able to get a decent piece here, maybe you might have played this second move up, saying, hey, if that's strong divergence on the monthly, I think I can at least catch a second leg. You even might have got out at 50, 55. That's still a pretty awesome move. But here, and these are separate trades, guys. So I really like the MACD, how it rounded here. The fact that we jumped up and this thing rounded here, and then the MACD and this blue line there, I run up down line. Right when that rounded, it was at the bottom here, and I love that. And this is sort of a rounding, sort of a coffee cup, and just bam. I mean, that's a beautiful trade. Again, that's the second trade. Second or third trade. That's one. That could be one or two. It could be the second one, or it could be part of the first one, the second leg. But that's definitely its own trade. And that's beautiful. It's like a 200% retracement. I mean, I'm not going to do the math on it, but it looks at least 200%, and this is closer to 300 or 400%. I mean, because that part of the coffee cup is pretty small. I mean, you're looking at like $5, maybe $8, and then it just jumped another, $20, $25. So, but the bottom line is, whether you got in at 30 and got out at 40, or you got in at 30, got out at 50, or you played it a couple times, being long from 2016 generally to 2018, would have been really profitable. And it's a longer term trade, obviously, or probably multiple longer term trades. However, that original rally, what I love about that is if you get in at 30 and you're long and you're confident that you're going to see a strong move, and you love the monthly, you love the daily, you love the weekly, or the weekly and the daily, and then maybe you love the intraday. You don't want to look at too many time frames though, because it gets to be really noisy, and it's really it's just a lot of information. You want to keep your information, selected and curated, because that's a lot of info. So, but if you love the monthly and the weekly and the daily, and they all look bullish, and it looks like a bottom, what I love about this trade is, let's just call it one trade, right, from 30 to 75, even though it might have been pieces of that one trade. You could not have really messed that up, because the market was so friendly. And so that's ideally, obviously, I mean, you just state the obvious here, that's what you want, right? you want to trade where you cannot really mess it up. And that's a really important thing to look at. I'm obviously going to talk a lot more about my analysis, my entries, my exits, etc., stops, and just a lot of granular details of how I trade and how. And right now, I'm mostly focused on entries, but I'm still giving you guys some targets. But this is my first real commodities historical trade analysis. So if you like my material, guys, please click subscribe. I go over technical analysis on commodities, forex, stocks, ETFs, crypto, ETNs, etc. I really see the value in mostly technical analysis, 85% technical analysis. And I truly believe that there are a lot of interesting predictive tea leaves that you can glean from technical analysis in various markets. Thank you very much.